Hello everyone, thank you for joining us today and welcome to this PTS Primo Charts educational presentation. Welcome, my name is Steven Primo and we are doing something new here. As you can see, our display is a little bit different. I'm really excited to be sharing this webinar with you today because we're going to be talking about our very brand new product. That's the PTS Primo Charts. This is something I've teamed up with ProTrader Strategies, and what it is your premier educational portal for trading anything in the markets. It basically is your one-stop shopping for going to learn how to trade the markets. It has all my techniques, all of my strategies, all of my methods in one spot, and we'll show you a lot of examples with that. And today we're going to focus and concentrate on one of the techniques that is proprietary, and you can only find it on the PTS Primo Charts, and that is steps. Steps is a great way to fine-tune your entries. And for example, if you look at this chart here, here's a chart in the spiders. I'm going to be going into detail a little later on, but as you can see here, we have a really nice sustained upward move on this 10-minute chart of the spiders. And these are all the signals that were generated by simply applying the steps tool. As you can see here, these are all the buy signals. Now, this is a 10-minute chart for all you intraday trader. If you'd like to trade on a longer time frame, well, we have a weekly chart here of Facebook. Now, using the same proprietary tool, steps, we can just simply click on the tool and you'll see all the buy signals that were generated going all the way up from 2014 to present. So, as you can see, this promises to be a great presentation. I'm excited about it. This is using our new trading platform strictly for education. It's your one place to go for all your educational needs for trading. Remember, our goal is to educate you. We're not here to force feed you signals and tell you where to exactly buy, where to sell. We give you all these different options and variables in which to do that. But ultimately, we want to put the information in your hands so that you can make your own choices. I've been trading for 40 years now, and if there's one thing I've learned in 4 decades, it's that no two traders should trade alike. And really, this is, in my opinion, why most traders fail, is because most traders are trying to mimic or copy someone else. We've all been taught that, in fact, myself included. When I first started trading, I went to all the seminars, I read all the books, and I was trying to emulate some trading guru or someone that I had seen trade before, and it would work every once in a while, but ultimately I failed my first year or two trading. And I know a lot of you are probably going through that yourselves. My mentors were lucky enough to show me all the things that worked for them, things that have stood the test of time. But then ultimately they said, listen, Steve, you have to learn this on your own and make your own decisions as to how you want to apply it. Do you want to intraday trade? Do you want to swing trade? Do you want to get in and out rather quickly with a quick profit? Do you want to stay in as long as you can and squeeze as much profits? So this is what I've learned in my 40 years of trading. I started my career on the floor of the stock exchange, the Pacific Stock Exchange. I traded down there for 16 years. 9 of those years I was a specialist making markets in roughly about 50 stocks. I did that during the crash of 1987 and the bull market that followed. So I've been involved in just about every trading environment you can think of, okay? Straight up, straight down markets, quiet markets, sideways markets. Therefore, with my experience and insight, I know what works in terms of consistency and I know what doesn't. So the good news is you don't have to waste 40 years of your trading in order to get to that point. What we're trying to do here is shorten your learning curve with all of our information, all of our education, right here exemplified on the PTS Primo Charts, so you can be up and running and hopefully get onto that road to consistency in just a small matter of time. Now today, I'm going to be sharing with you a great proprietary technique that will show you how simple it is to fine-tune your entries. This is our steps tool that can only be used on the PTS Primo Charts. But before we begin, we're required to show you this, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results using steps, but please remember that we're required to tell you that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. So as you're taking a moment to view our disclaimer, I would also like to invite each and every one of you to follow us on Twitter. Now, I've posted some things recently about the markets, about what we think you should be involved in or buying or selling. But remember, these are just educational means of giving you our insight and our different ideas about what these markets are. The real nuts and bolts are in our courses. But if you like to follow us on Twitter, there's our handle right there. We post things on a daily basis, anywhere from just little bits of wisdom to actual signals that our strategies have generated. So feel free to follow us on Twitter. Excuse me. Now, having said that, remember, we are first and foremost an educational company. Now, PTS Primo Charts is a great tool to expand your education. This is the one thing you need in order to become a consistent trader. Sound fundamental education that has stood the test of time. You don't need some fly-by-night system that generates hundreds and hundreds and hundreds of profitable points per month and then blows up, the minute you start trading it. I'm sure many of you have experienced that. I know I did when I was trading 40 years ago when I was struggling tremendously. I did the same thing everybody else does. I purchased all these convoluted systems and strategies, had no idea what they were based off, and listened to all these wild numbers that they were supposed to generate. And sure, every once in a while I'd have a good trade, but ultimately everything blew up. And the reason is because I took myself out of the game. I was relying on someone or something else to tell me where to buy, tell me where to sell, tell me what the perfect market was, what the perfect time frame is. This is the way 99.9% of all traders trade. And this is why most traders fail, because you're not a part of the process. And the reason is because you've never been given the education. Well, your problems are over, because this is what we do at Pro Trader Strategies and Specialist Trading. We provide you with the education, especially on our PTS Primo charts, so that it's all right there in front of you. So as you can see, my goal is not to force feed you signals. My goal is not to tell you on a daily basis what to buy or sell. My goal is to give you education so that you can be in the driver's seat yourself and you can trade with the specialist edge. This is the same edge that turned my trading around some 4 decades ago and what has been able to sustain me for 40 years. And hopefully this educational edge will be able to sustain you as well. Okay, so going forward, this is going to be conducted like a class. If you're new to my presentations, I love to take your questions, but if you have any, if you kindly wait till the very end of the class today, okay? If we stop every 5 seconds for a question, we may be here until 6 o'clock tonight. So I'd rather get everything out front, teach you what this is based off of, and then take the last 10 or 15 minutes for questions, okay? All right, so let's begin. And I'd like to start off by actually asking you a question. Has this ever happened to you before? Whatever strategy, whatever system you trade, whatever market you trade, whatever time frame you trade, it absolutely makes no difference. But have you ever entered a trade too early? All right, let's say your system, whatever it's based off of, could be based off of news, could be based off of fundamental information, could be based off of the moon. It doesn't matter. But let's say you get in too early and it doesn't work the way you want to, so you get out and lo and behold, it goes in your direction, but you've already exited, okay? Or how about the opposite? Let's say you enter a trade too late. Right? The market, whatever you're following, took off. You were a little bit gun shy. You weren't ready to pull the trigger yet. And then by that time, it had already gone up way too high. And then you entered and you've given away all your profit because you probably entered where you should have been selling. Or how about you don't know when to get back in? Many times we have traders who have a good strategy, a nice way of trading. They get in and out with a nice profit. But then guess what? It continues to go in that direction. And they go, boy, I left so much money on the table. I should be getting back in. But where do you do that? I mean, what's that based off of? Just a whim? And then are you going to get in at the very end of the rally or the end of the trend? So when do you know when to get back in, or should you be getting back in? And then lastly, you don't have the confidence to pull the trigger. Let's say you have a method or a strategy that actually works pretty well, but you're too frightened to get in because you haven't, traded it long enough, or you haven't seen results to give you that confidence to put you over the edge so that you really take the trades. All right? Well, this is probably something, all of these categories here are something that every trader has experienced at one time or another. And this is why we developed our new entry technique, which is steps. And first of all, before we go into what it's based off of, or what it actually does, I want to define that there are basically only 2 types of entries. And regardless of what you may think, you say, well, Steve, that's not true because I base my trading off of a proprietary technique, a proprietary indicator. Or someone say, no, mine's based off of the news. It can't be the same as anyone else. But if you look at it overall, there are just 2 types of entries, regardless of what method you're trading. Now, the first is a continuation type of entry. This means that some type of trend is already in place, and you're just continuing with that trend, and you're just going with the market. So in other words, you're not waiting for any type of pause. You're just simply buying at specific structured points along with the continuation of the move. This is a continuation type of entry. All right, a lot of times this will happen with news events. The market's been going up, you get great news, it goes up even higher, and you continue to buy even more, okay? Now that's the first type of entry. Now go back and look at your own type of trading. Is it based off continuation? Because if it's not, then it's basically based off of the second type, and that is a pullback entry. A pullback is simply you wait for some type of trend to be established. It doesn't matter if it's up or down. In this case, it's up. So the market is going up, and as most markets trade, they don't usually go straight up or straight down. You have this type of a stair-step approach. So in this case, we see whatever market we're trading, whatever time frame, in an upward trend, but then it has a sell-off. That is simply the pullback. Based on some type of structure, some type of plan that you have, that's where you want to enter somewhere within this pullback, because usually trend will resume. So you see, these are the only two types of ways you will ever enter a market, either through a continuation of the trend or a pullback within the trend, okay? Now, this brings us to steps, because steps takes advantage of both of those types of market scenarios. And it doesn't matter if you're trading tick charts, doesn't matter if you're trading weekly bars or even monthly bars. Now, a lot of people say, well, what exactly is steps? What does it stand for? It's simple. Steps simply is short-term entry points. That's all it is, okay? You're taking steps to improve your entry with two proprietary short-term entry points. Now, here's the one thing I want to get straight right off the bat. Steps is not a strategy. It's not an indicator, okay? So it's not meant to be applied that way. But it's a combination of two proprietary entry techniques that can be virtually applied to your current trading method or used as building blocks for the construction of one. So let's say you have a method, and once again, maybe you entered too early, as we went over before. Maybe you entered too late. Maybe you're afraid to pull the trigger. But the method is actually not that bad. You just want to fine-tune your entry. This is where steps comes in. It's a great, great tool in addition to that. Or let's say you're the type of trader who likes to tinker underneath the hood. You like to make different plans, different methodologies, different trading techniques. Well, one of the pieces of the puzzle to any trading plan or any technique is the entry. Here's where steps can really help you. Over years of what I've seen in the market, our proprietary techniques, steps is one of the best things I know of for fine-tuning your entry. So it does not matter what you apply it to. It does not matter if you apply it to a strategy that's based off news. It absolutely makes no difference if you apply it to a strategy that's based off indicators or technical information. It makes no difference if you apply it to a strategy that's based off astrology. It makes no difference. It's just one important piece of the puzzle. So remember, it's not a full-fledged strategy nor an indicator. It's simply a very highly probable way for entering into a trade. All right, so let's go over the different steps. Remember, they're proprietary, but we're going to show you exactly how to apply them, different markets in which to apply them, and you'll see how easy they are. And once again, we'll show you how you can apply this on our new PTS Primo Charts, where you can exclusively find steps and apply steps. Okay, step number one. Step number one is an entry point designed for trading those strong trending markets. So if you're the type of trader who feels like, boy, I missed this market, it's just taking off, I don't know where to get in now, or I got in and took a small quick profit and it continues to go, where do I get back in, or where would I even consider that? This is what you want to apply, step one. Step one is also very good for intraday trading. When you see those fast markets based off maybe a news event, based off maybe something that happened, or based off of just a lot, a program, is being applied to the markets, and you see these big, big, strong, quick moves. Steps one is great for that. Let me show you what I mean here. Strong trending markets, as you can see. Okay, here is the new PTS Primo charting platform. As you can see, you can apply any chart, any market to it. This green tabs, these series of green tabs here are all our strategies, all our different methods, all our different techniques. So everything is right here for you. There's nothing you have to do to, hope that you can have it apply to your platform or what you particularly trade with. It's right there. And we provide you with, these charts, and here there is live data on IBM. Now, this is an IBM chart, and you can see we have a really nice, strong, trendy market on daily bars, okay? How could we have entered? Well, the first thing you do using the PTS Primo charting platform is simply click on the Steps tab. In this case, Steps 1, since we're looking to trade a very strong, trendy move. And once you do that, you'll get a drop-down menu that gives you all these different options. What we want to do is simply click on the signal arrow, all right? And that's going to generate a series of arrows that simply tell us where the entry should be. Now that we've done that, look at all the places where you could have entered, all right? These are all signal arrows to buy. Now, the beauty of steps is that we'll always be in sync with the trend you're trading. So if you're going up, you're not going to see any sell signals because we're always going to be in sync with the overall trend. Now, a lot of people say, well, that's great, Steve, but some of these are better than others. You're right. Some are better signals. So you want to fine tune your entry. Here's what I'm going to be teaching you right now. There are several ways to do this. Let me give you some of the most popular and consistent ways. When you see a green signal arrow, you can either enter on the market close, which is the simplest. Let's take this signal right here. This was in mid-January to end of January. At the end of this day, a signal arrow would have been generated. So all you would have had to do right towards the end, it's live, so you would have been seeing it being generated towards the end of the day. You could have entered right, 5 minutes before the close of the day and enter on the close. So that's just one way to do it. Another way would simply enter on the next bar's open. So you would have waited for the next bar to open. In this case, it opened a little bit lower, and this would have been a nice way to enter as well. Now, the most conservative way to enter would be to use our confirmation method, and that's to wait to enter one tick above the high of the signal bar. So in this case, you would have waited for this bar to close, and once you traded above it the next day, you don't have to close there, but just traded, that's your confirmation that it's going to go higher, and it did. So there's lots of different ways to apply this. Once again, you can either go market close. Since these are live charts, all you have to do is just simply enter 5 minutes before the close, because you would have seen the arrow being generated. Or you could have entered on the opening of the next bar, or one tick above the high. So the next day, wait for it to trade. Because oftentimes you'll see it doesn't trade above. Here's a perfect example. Right here was a buy signal. Had you have purchased at the close of the day or the opening of the next day, you would have been in, and you would have maybe had to wait a good 3 weeks to 4 weeks before it started to take off again. But had you used the last technique, which is the most conservative, wait for it to trade, well, you would have waited this entire time until ultimately it traded a good 3 to 4 weeks later above. Now, as I stated, as the trend is going higher, you will only be seeing buy signals generated. But once that trend changes according to its proprietary rules, well, guess what? There are no more buy signals generated. So that's the beauty. It's not going to get you in. Remember, it's looking for strong trendy markets. It's not basing its entries off of pullbacks. So right here, it was assumed that the trend has changed according to the rules of the proprietary tool. So if the trend is going down, it doesn't mean we have to stop trading. We can if we want to, but if our PETS tab is still applied, it's going to start generating sell signals. So if you're the type of trader that likes to trade both long and short, well, you can do the same thing. Now here, once you had the very first sell signal, you could have used that if you had been long from way back here and you've been applying your position and increasing it. This could have been your first place to exit. Or if you were flat, you could have said, well, I'm going to go short now, and sold right here, either at the close, once the next bar opened, which was up here, or once we traded just below. Either way, 3 to 4 weeks later, you had a really nice short trade. Okay? Obviously, something came out that caused IBM to really gap down in April. This was this last week or so. It wasn't as if we knew 3 weeks ahead of time that some news or something was going to come out. We didn't know anything. Every technique, every method, every strategy we have that's listed up here in our strategy tabs is based off of listening to the market. Nothing is based off of news. Nothing is based off of volume. Nothing is based off of Fibonacci or some convoluted indicator or support and resistance. Remember, as I stated earlier, those are all the things I studied some 40 years ago, and they didn't make me any money over time. The only things that have worked over time are learning to listen to the market, and that's what Steps does for you. All right, now here's a strong trending market to the downside. As we can see here, the market started to trend very strongly, and as we're going lower, well, Steps 1 just continues to generate sells all the way down. So you see how this is a great tool for either increasing your position or getting back in. Let's say you got short and exited with a nice profit. Maybe you had the puts and you covered or you sold your put. And then guess what? It continues to go lower. So you get back in here and make some more money to the downside. This is the beauty of Steps number 1. Now we could, just as we did before with our long entry, we could go short by entering on the close, on the next bar open, or one tick below, okay? These are just a few of the standard ways for entry. Now, what if we want to add to long-term positions? Because we know that a good number of our members, we have members all over the country, in every state, and in over 110 countries around the world, trading different markets. We have people trading the Indian markets, trading European markets, trading currency pairs. So we know that a lot of people aren't just traders, they're holding positions for a long time for their IRAs or for their long-term portfolios. And as you can see here, here's a weekly chart of the spiders going back, I would say just a little over a year ago. Now we've had a really nice sustained upward move. Let's say you've been long this in your portfolio, in your IRA, and you want to increase the position. You off your analysis, remember, this is not a strategy. So based off your analysis of what you think the markets are doing, you think the market has a lot more room to go on the upside. But you're in a little bit of a quandary because you don't know where to get in. Well, Steps number 1 will fit in perfect to this, all right? Because it moves in really along with really nice trendy markets. So as you can see here, in June of 2016 last year, a buy signal was generated. If you wanted to get back in, well, another one was generated in November. Still another one in December, still another one in January. And as you can see, we can also go to a 10-minute chart, because if you like to trade short term, the same technique can be applied on a 10-minute chart of the spiders. So it wouldn't matter if you're trading it weekly or a 10-minute time frame. Look at all the buy signals that are generated. If you want to add to your position, Steps number 1 is the best tool I know of for applying to strong trending markets, and you want to add your position. All right, so that's trading with Steps number 1 in a strong trending market, either up or down. How about step number 2? Okay, completely different. It's an entry point designed for trading strong pullback markets. Remember, this is where we're looking for a trend, but in a stair-step approach. We're looking for a nice trend that's been established, let's say to the upside, and then we have a sell-off, where most people think that the sell-off is telling us that the top is in place and it's time now to get out of this stock. Step number 2, look for less expensive places to get back in. Let me show you how this works here. Here's our platform once again, and then this time we have Tiffany, TIF, applied on daily bars. Now here's the very strong run-up Tiffany had in February coming into March. And now it's starting to roll over. This is where most people on the websites, on the chat rooms and trading rooms will say, time to exit, get out of this. It's going to probably come back to support where the institutions want to buy it, where the volume dries up, where the full moon is. Enough silly reasons you can come up with why you should be exiting this. But all you have to do is forget about that, what my mentors called noise, and just listen to steps, because here's what we do when we apply steps number 2. You would come up to the strategy tab section here and click on steps 2. And once again, a drop-down menu will appear giving you all these different options, and you want to see what the signal arrows are. So you click that on, and automatically the signal arrows will generate. Now, because this is a pullback type of entry, you're going to get less signals than steps number 1, but they're going to be at better prices, okay? Steps number 1 is more of a breakout. Steps number 2 is looking for those pullback, those inexpensive places to buy in an existing trend. So we had just about a month ago, the first or second week of March, a buy signal generated in Tiffany, and look what happened coming into April, okay? All based off of what the market is telling us as translated through steps. Now this works to the downside as well. I'm sure someone could look at this and say, boy, this has come down. It's made a great bottom right here. This is where all the support is. This is where the institutions are buying, according to that software I paid thousands and thousands of dollars for. This is where the institutions love this. This is going right back up. The market looks really strong. The NASDAQ, the Dow are making new highs. So I've got to buy this, right? I like this. I like the company. I like the earnings came out and it's starting to go up. Do you see how all those decision making processes are all based off of outside information? They're not based off the market. And what is the market telling us? Well, according to the STEPS proprietary entry technique, we're still going lower because it generated a sell signal. It's telling us that this is just a bounce in a downward trending market. So you don't want to buy this. You don't care what the institutions are doing. You don't care what the Fibonacci retracements are. You just listen to the market because the market doesn't know any of those things. And the market's telling you it wants to go lower. And as you can see, it's been going lower up into April, okay? Now, a lot of people, once again, are long-term investors. And a lot of people like to buy new IPOs, new issues coming out. They like to do the research to read about new issues coming out. And that's fine. Once again, this is not what our strategies or anything we teach or mentor on are based off of. But remember, STEPS is not a strategy. So you can apply it to any technique, any style you'd like. So if you're the type of person that likes to read about these new issues, these up-and-coming companies, well, STEPS is perfect for you because it can be applied to any type of trading style. Now, here is a weekly chart in Facebook, going back to when it was initially offered, the IPO. The IPO came out roughly somewhere in 2012, around the $40, $45 level, somewhere around here. Now, what most people doing on that crazed, exuberance of wanting to get into the stock, purchased on the opening when it was made public, and look what immediately happened. It immediately, in the coming months, lost half of its value, went in the 40s down to the 20s, okay? This is the way most people invest or trade. And they give themselves the justification by saying, well, I'm in this for the long haul. I'm an investor, so I really don't worry about it. But, quietly inside, it bothers them that they've just given away half their investment. How could we have fine-tuned our entry? Well, we're not saying that Facebook was a bad company in 2012. We're not commenting anything on the inner workings of the company and the earnings. We don't care. We're just trying to help you with your entry. So if you're the type of person that likes to invest in new company issues or new IPOs, well, why don't you wait for a better entry than simply using this emotional exuberance and entry when it initially comes out? Because had you applied steps number 2, well, you would have waited a full year before the first signal was generated. Here was our buy mid-year in 2013, and another buy was generated later on the summer of 2013. So even though this one didn't work out that well, remember you're investing, and it's still a lot better than buying way up here in the $40 range. These were roughly about the $25 and $22 range. So you feel a little bit better about purchasing it there, and then coming into 2014, 2015, we see what happened. All right, a $20 stock went up to a $70 stock. Now, a lot of people here thought in 2014, well, this is it, top of the market, bad earnings, bad news about Facebook. There's a lot of other up-and-coming companies that are doing much better than this. We should sell it. Well, according to steps number 2, another buy signal was generated on the pullback right here in 2014. Now let's look at a longer-term chart. Here is the buy signal in 2014. If we go forward, here is that exact same buy signal. And from 2014 to 2017, steps pinpointed every major pullback in Facebook. There was nothing you had to study. Sure, if you wanted to study and look at the earnings, you could have, but there was really no reason because steps pinpointed every pullback. So this is the beauty of this particular technique in that it finds these really nice places to re-enter and to enter at lower prices, as opposed to trying, chase something or having this emotional exuberance right when it comes out, okay? Now, let's look at another way that most people will enter. To have a broker recommendation, okay? Say their broker or say some house or say some trading guru recommends you have to buy something. Say you go watch someone on TV and they tout some stock during the day or in the evening, okay? And this usually happens. This is the way most people like to trade. The news will come out, and then the next day, everyone in the world is buying it based off of the recommendation of what someone said in TV. And usually, not all the time, but many times, it's the wrong place to buy, because then this usually happens. Because the smart money was buying somewhere down here. And usually the public, which isn't that smart, which goes off emotion, which goes off of news, which goes off of interest rates, is a day late and a dollar short. Because why? They're not listening to the market. They're listening to someone say what they think is going to happen. Now, we're not saying this isn't a bad purchase. We're just saying that your entry is faulty. So rather than jump in the pool at the same time everyone else does, apply steps number 2. Wait for a pullback. Wait for the price to drop down so you can get a better price. Had you done that, you wouldn't have jumped in and got so emotional the way everyone else did. You would have actually waited for a buy signal right here. This was just last February, and a buy signal was generated when most people thought, boy, this recommendation was terrible. This stock's not going to go anywhere. And then look what happened. This was an actual signal generated using step number 2. And then lastly, we can use this for intraday trading as well. Here's a 15-minute chart, a recent chart of Apple. Okay, you can see we have a really nice, strong, trendy market. Now, if we applied steps number 1, you're going to get inundated with a lot of signals. Why? Because it's meant to be applied for a strong, trending up market. But let's say you're not that type of a trader. Remember, it's not our job to tell you when to buy or when to sell. We're just giving you all these different variables and then letting you decide, because everyone trades differently, and they should. We encourage this. We don't want everyone to trade the same. So we give you the different options. So if you're the type of trader that says, you know what, I don't like chasing things in an uptrend or a downtrend. I like waiting for those pullbacks, those less expensive prices. Simply click on steps number 2 and look at all the nice lower places you could have purchased Apple on its upward move. Okay. Okay, so before we go to question and answers, let's review exactly what we taught you. Remember, steps is a proprietary entry technique. It's not based on any fundamental news. It's not based on any convoluted indicator. It's based on momentum and on a few indicators that we do follow, but we put together into a proprietary formula. It's very simple. We want to keep it in-house because its real message lies in just helping you fine-tune your entry. It's just an important piece of the puzzle. It's not a full-fledged strategy. It's not something that you're going to be told where to place your stop. It's not something that tells you where to exit. It's not something that tells you money management, okay? If you're the type of trader that says, Steve, I've been trading long enough. I already know all those things. I kind of know how much risk I want to apply. I know how long I want to be in or out of a trade. I don't need to learn about, stop placement or exit placement. That's fine. Then steps is for you. Why? Because it can virtually be applied to any strategy. It can be applied to fundamental strategies. It can be applied to technical strategies. It can be applied to any market. If you trade currency pairs, if you trade the E-mini futures, if you trade stocks, does not make any difference, even commodities. Steps can be applied to any time frame. If you're an intraday trader, or if you're a long-term investor that only looks at your portfolio maybe once or twice a year, you can apply steps to that. And then lastly, any direction. We know a lot of people like to be in the markets long, but they don't like to trade short. And then vice versa, there are a lot of traders who like to trade both long and short. So if you only like to be going long, only take the buy setups. If you like to be going short, only take the sell entry setups, and vice versa. You can use both. That's the beauty of steps. It's one important piece of the puzzle, but it's one important piece of the puzzle that most traders have difficulty with. So we're taking the work out of it for you and giving that in steps. Now, here's our special attendee discount today. We're going to offer you steps, a great package. This is the 2 proprietary techniques for continuation entries and for pullback entries. You can apply it to your strategy. You can build your own strategy. It gives you the confidence to pull the trigger, and we feel it's just that important to apply to any trading technique you use. Along with it, you're going to get our premier market educational portal. That is the inclusion of our new PTS Primo Charts. I'm really excited about it because this is brand new. I mean, we're talking about the last few weeks. This is when we started applying the PTS Primo Charts. That's how excited we are. And we really can't stress how important it is that everything is all in one place for you. There's no need to be looking around. It's right there. And here's the deal we're offering. We're giving you a great, great discount. A 30-day trial of steps, okay? All the of steps, what's included with steps, for only $7. And this comes with the PTS Primo charting platform, okay? But this is for a limited time only. $7. I mean, I can almost guarantee you that you've spent more than that in commission already coming into today. If you've been trading today, you've probably spent more than $7 in commission just today. Now, we don't even know if you've had a winning trade or not. So $7, you're going to get the platform and you're going to get steps, the steps course for a 30-day trial. So you can use it for 30 days to see how well it works for you. And I think after 30 days, you're going to be convinced what a great, great deal this is. Now, this also includes the scanner. So there's a bonus with this. One thing I didn't talk about. Let's say you like to trade daily charts of steps number 1, all right? Well, you go to the drop-down menu, steps number 1, and then click on the scanner. You'll see a window like this appear, okay? All you have to do is load the symbols, which we provide for you in the different markets, and they will appear. Then you simply hit the scan button, and all of the signals that are generated, in this case we have red here, will tell you that sell signals have been generated in these particular stocks. Other ones will tell you that buy signals have been generated with green tabs right here. That's how simple it was. This comes with it. So on a daily basis, you can see what the setups are for the next day. Here's an example of that. As we can see here, here is the PTS Primo Charts, and here's another format you can apply it with. We have 4 different charts of Apple. Here is an hourly chart, a daily chart, a monthly chart, and a yearly chart, okay? Now we have our proprietary background color code in the back, all right? If we have a red background, we only want to be selling. If we have a blue, we only want to be buying. Now the next thing we can do is apply steps and look at all the signals that were generated on an hourly basis. Look at the buy signals that were generated on a daily, a monthly, and a yearly. This is what I mean when I say we're so excited about the PTS Primo charting platform. This is all yours, just a click away. This is steps. This is not including the PET D. It doesn't include strategy 1, 3, 3A, 4, 5, and 8. Not even the top and bottom 25%, but you're getting steps 1 and 2. So this is a great, great deal, and I can't think of much more information and much more product you get for only $7. So try it for 30 days. See, we'll be convinced that you're going to fall in love with this after 30 days, and you're going to want even more, okay? Here's how to take advantage of this really great, great offer. As you can see here, this is the information. You want to contact my sister site, Pro Trader Strategies. You can email them or call them directly. Now, there's a link right there at the very bottom, but you know what? They have posted a link at the very right on the chat box. That's probably better because the link in front of you on the screen is not live. So you would have to copy and paste that. I would probably suggest going to the chat box on the far right hand corner, clicking on that link, and it will automatically take you to the great $7 deal. If you're having any difficulty with your browser or it's just overloaded, because we have a rather large crowd here today and it may be a little overloaded with people trying to get at the same time, just call up Pro Trader Strategies and they can set it up with you with many of their trading consultants over the phone, okay? I'm going to leave all this up here for you, this great $7 deal, but remember, it's only lasting for a limited amount of time, and then we go to the full prices of the platform along with the steps course. But I've opened up the question and answer box, and let me see here. Amit asks, but sir, the copy book style of every stock is not possible. I'm not really sure what you mean by book style. It says, I have seen stocks that are very volatile. Sometimes they are in an uptrend, and then some stock goes sideways for a very long time. Well, you're right. That's very true. The beauty of this is that we're not guaranteeing it, but remember, since this is a proprietary technique used to be applied to strong trends, it knows when there isn't going to be a strong trend. It knows when a strong trend is not applicable, so no signals will be generated. So it'll keep you out. And all you have to do is simply wait for the trend to be established or go to a different market that isn't a strong trend, okay? Chuck asks, what happens after 7 days? Actually, it's not 7 days, it's 30 days, Chuck. You have 30 days of a free trial for $7. 7 days is only 1 week. We're giving you 30-day trial for only $7. So if some of you got confused, I know a lot of websites you go give you a free 7-day trial. We're giving you a 30-day trial for $7. Okay. After 30 days, you no longer have access to the course and to the platform, but I'm sure you'll want to make a decision after that, okay? Because you'll see how much it'll help your trading. Frank asks, does Steps have a rule for when to use step 1 versus step 2, or do I need to make that decision as the trader? Frank, that's a good question. That's pretty much up to you, because remember, these are just a piece of the puzzle. One piece is for you to trade strong trending markets. Another one is for you to trade pullbacks. Those are the only type of entries there are. So you have to decide, what type of trader am I? Okay, do I like trading pullbacks, getting in at inexpensive prices, maybe taking a third less of the signals because there aren't as many pullbacks as breakouts? Or do I like to trade as much as possible? That's the decision you have to make. Then we just provide you with these two. Now, I'm sure after 30 days and looking on a nightly basis and intraday basis of all the signals that are generated, you'll be able to come up with an answer as to which one best suits your needs. 30 days is a full month to decide for yourself which style works best for you, okay? Okay, Chuck asks, yes, what happens after 30 days? After 30 days, just as with any trial, the trial is over, okay? And then you have, the access to the PTS charts automatically ends, and it's basically, your decision. You can decide to jump on board with ProTrader Strategies. They can probably put together some nice discount for you. Or you can decide to go with possibly another strategy, because we're going to be talking about in the coming weeks many more uses with the PTS charts for using the PET-D, for using strategies 4 and 5. There's so many different things. That's why it's such a great platform, because everything is right here. Everything's right in front of you. All you have to do is click on a tab, okay? So right now we're just getting you started with a great piece of the puzzle. That's Steps. And a lot of traders have a great idea of how they want to trade, but their entries are faulty. Well, Steps 1 and Steps 2 takes care of all this for you. And you've just seen for yourself the great entry signals it generates. Now, for $7, see for yourself for an entire month. If you're not convinced after a month, well then, there's no way we can ever convince you. You'll get every, market that you'd like, and you can just basically see how well it works and how well it performs in the different time frames and different directions, okay? And remember, the best way to take advantage of this is to click on that link in the far right under the chat box. If you're having trouble, if it's kind of clogged right now because we have so many people trying to take advantage of that $7 deal, all you have to do is call up ProTrader Strategies, but you don't want to miss that deal because it'll go probably up to several times higher in price, okay? Nero asks, I have PET-D and Strategy 4. How does it work? Well, you know what? It'd probably be best to contact ProTrader Strategies. In the coming weeks, I will be giving presentations, Nero, on how to apply the PET-D with number 4 on the PTS Primo chart. And it's entirely different from how we've been able to use it before. It's a lot simpler. So this is also a great way to use those techniques. I would just contact them because you're already a preferred member of ours. You're a member of our platform. Or I should say our strategies. So you'll be getting a much better deal with them. Okay. In fact, I think you may have just seen that they're saying that they will access you to run PET-D and 4 on the trial period as well. So I assume I would check with ProTrader Strategies, but if you already are a member of any of our courses, you'll be able to run those as well, just so for a 30-day trial, okay? And you're going to be amazed at how simple it is. I know that, the way we've done things in the past is we've tried to accommodate you for whatever platform you have. And oftentimes that gets to be difficult because it's not our fault so many times. It's the current platform you're using that has bugs in it, that has upgrades or downgrades, and then we have to switch the platforms onto a different level, and it's not user friendly. Here, everything is right in front of you. It's just something I just love, and it is, in my opinion, the premier educational trading portal because it's really there for educating you. It's there for educating you so that you know how to trade based on your own decisions, okay? So we are an educational company. We have everything right here in front of you with our PTS Primo charts. And as you can see with Steps, what a great way to start out, okay? So once again, contact Pro Trader Strategies. If the lines are really busy in terms of using the link, contact them and by the phone or email number there. But you want to do it very quickly to take advantage of that $7. Okay, $7. I mean, think of that. Can you go out to breakfast for less than $10 or $20? Even by yourself. The other day I went out to breakfast and it was about $12. Okay, so you're going to have this full access to the STEPS course and to the PTS Primo Charts for 30 days. So I actually asked, when do you update the charts? I'm not sure what you mean actually by updating the charts. If you're talking about the time, there are different levels. You can get real time. You can also get delayed data. It's up to you. You can get intraday. The best thing would probably be to ask Pro Trader Strategies to go into specifics about what you're actually asking. Okay. In terms of updating the strategies, well, the strategies are pretty much the same. They're not updated that much. They're proprietary, and we pretty much keep them the same. We're not going to update and change the rules at all. So if you're talking about actual time frames or different ways in which to apply them, yeah, they have a live access. They also have a delayed if you want. It's up to you. Okay. So that about covers it. Remember, STEPS is a great tool for fine-tuning your entries. If you've had trouble in the past, if you have had excuse me, difficulty in getting back in, if you're a long-term trader and like to trade or invest in IPOs, this is a great way. You can experiment for yourself for the next 30 days for $7, and I'm sure after the next month you'll be convinced. Okay. So contact Pro Trader Strategies with any questions concerning data, with any questions concerning the 30-day deal for $7, and they can answer anything right off the bat for you, okay? In conclusion, I want to say thank you so much for attending. I hope that you learned something about one of these great tools we have that's only applied, and you can only see it on our new PTS charting platform. But thank you so much, and I look forward to all of you becoming students of mine at the PTS Primo Charting platform. We'll see you next time. Bye-bye.